Okay, Wild Wednesday's over with, and as usual, you had to put your orders just below the low of yesterday. As the market went into fresh territory here, you want to gobble up all this really cheap price down here. Right now, we're about to break this trend line here, and then eventually attempt to take out the high of the day. Another possibility is that we retest this a fourth time, which for the people that trade double bottoms, they were pretty upset when it became a triple bottom. I think anybody would. But perfectly on time for the cute little triple bottom. Little wedge thing. Here's the argument for a quadruple top, breakout, find support. Now we're ready to advance the team. We've already gotten the high of the day taken out in the euro dollar earlier. So put some more buy stops in. And my target's basically the floor that was taken out. It's about up just before the close. I could just go up about 5 more pips. You want to see what 5 pips looks like, you just put on the 5 pip grid. This way it gives you a nice to go for the indicators here. Okay. Typical bulls and bears. I guess all that stuff's useless unless you got a trade plan for it. If you're going to pull the trigger every time you're oversold, that makes sense. I think so. Okay, here we'll go for 5 pips. So this is 10 pips from here to my target of 1 target. Next one's about maybe 20 pips or something. Okay. Well, it's the end of the day. And it's been a ruckus retest. Another ruckus test down here. You just got to buy into that. Same thing here. Sunday night's buy-in at the Friday's low was taken out. You're buying here for 25 pips. You got a buy limit on every 5 pip handle. All the way down. Just keep going until your head floats, and then got a big stop down there. Maybe a couple stops peppered out there, but you mostly want to be getting into, say, 5K. 3K. This is set for 3K with a stop. So every time you pull the trigger, you're launching orders, and you're trolling for volatility spikes. And it's not that many pips. I suppose you have to decide whether you want to bail. That's my best entry right there right now. So this is the trend trade. And this is the plunge team comes in here. And right now I'm trend trading it, a classic trend trade entry. Just buy as it's going up. Well, this is like kind of pulled back into this 1 hour. So this could be resistance too, but I guess you'd have to draw it out a little more accurately off the last known high here, so you keep on constructing a, you know, it's like a estimated time of arrival. You turn on the chart shift there to get a better ETA. So if you're trying to time the market, which is whenever you have an order bank sitting down here that lasts, say, all day long, say you peppered buy limits every 7.5 pips. While the market's up here, you drop a 7 pip grid. Here's your stop. Or you just hand place orders was the other choice. A little more diligent, a little more logical. So every hour there's a trade, possibly. So this top becomes this bottom, becomes this bottom, becomes this bottom. So this is the fair value. It's a little bit on the bottom side of this, like a heavy, lower weighted fair value right in here. This was today's battlefield. And anytime you're in the middle here, I figure it's okay to put on, and it becomes a doji in the end. Right, so this would be a doji looking day. Regardless of what, if you closed right here, it'd be a doji just because you've wicked down and you wicked up. You don't know when it happened. When you look at the daily candle, it could have wicked over here and it could have wicked over here. You couldn't tell. Could not tell. So that's kind of a problem for candlestick traders. The question always is, well, what happened during that candle? And that's the old, well, you know, what came first, the chicken or the egg? You get caught up in all that stuff. Okay, a baby rally here, maybe 5 pips. But if this is your target 5 pips, then set of 5 and 12 or something. Whatever. You know, the highest probability trade on here is a pretty small amount of pips, maybe 20, 15 pips. So here the strategy is buy every 5 pips for the next 20 pips. So you only get filled on the top bank. If the stop was 25 pips on this, it's designed to make 50. So maybe you haven't made your profit yet. You didn't get filled on these two. So actually you have a high risk here. So you got to consider that if you're going to go fishing, you don't want to throw every fish, rod and reel at the thing. You need some dry powder in case it's not going up. In case this is just a drift and a slam. If it slams down, then you're going to get picked up on this 1 hour. So since I'm on the 1 hour chart, you can see this is a 1 hour. This only took an hour, like 2 hours to make money here. Basically, if you'd have bought super heavy every 1 pip, say, this would have been a great fit, perfect script for the occasion, perfect invitation. So you get filled on your buy limit here, 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 and you get a dense pack. So maybe there's 10K spread over 15 pips with a hard stop. Then you have another bank that starts at here and does the same thing. So you have two overlapping kind of grids, basically a 20K sitting down, but you're probably only going to fill about 13K. If you fill the whole 20K, maybe you're going to blow out if you have a soft stop on the bank. So each 10K has a hard stop connecting every ticket in there. That would look like so when you dropped it, it would be, say, oh, I'm going to buy, I'm going to buy, I'm going to buy, I'm going to buy, and then we're going to put in a tight stop. So at 10 pip, every pip with a 5 pip stop here, which means this top is going to be way more. You put the spread in there, you're really spending like almost 30 pips on that top. So the top order, maybe this is looking to make 60 in the end. And this one's looking to make, let's say, now you're going to go 10 pip increments. You went in 1 pip increments here. Here you're going to do 10s on the way out. So this one gets out at 50. This one gets out at 40 and on. So this is the expansion, and you've got the hard stop. Now, how long does that order last is another critical thing, because if this order evaporated in 15 minutes and you dropped it here, it's not going to be there when this party happens. But if you get here and you're like, you know what, for the next 12 hours, next 8 hours, I'm going to put that order in. Of course, it took 1, 2, 3, 4, 5, 6. It's almost, I saw 7 hours to be on the safe side. It took 7 hours for that to happen. Now, if it lasted 12 hours, you can put a 12-hour time decay, or you can put them good till canceled. I guess whatever the date you can set manually inside the tickets. There's a manual way to do it. Just go to expiration, they call it. It's kind of a depressing thought. I want the orders to be there until the end of time, just in case it comes back there. But yeah, the retest entry, I think, is a high probability setup. You just keep buying at the 100-yard line 3 times in a row. Now here you had to take 10 pips of heat. So actually, I think I did the math wrong here. I was treating this as if this was 10 pips grid, but this is only 5. So this is 10. This is literally a 10 pip plunge. You got a 15 pip stop on that, and you load it up here. Your first logical exit's going to be here. You scream through that. Your next logical exit's going to be this, and that's where you final climax. Slight drift pullback, go into Asia here, and this thing weasels its way north with a couple of kickbacks along the way. So I'll buy the plunges of, say, 2, 3, 4, 5, and then you just put a hard stop on that. And that, just how long does that last? And that's the whole key. How long does that order last? So your exposure is always evaporating. You have any kind of feeling of being put upon. Now, certainly, to build the script that says buy every pip for 10K, with this, it's going to be each line, and then it's kind of easy for the stop because you can just do this. Now, the exits, if you do a 10x on that, if you do actually a double, you can put these 2 pips apart, right? So 2 pips apart, you got to figure out how deep. Here's your hard stop, and you could also have it so that this is your scalp order. Now, when the market comes plunging into these orders, it's the big hard stop. It comes weaseling in. The problem with that is, what if it doesn't, like if this is your big kahuna trade and these are your scalps, then, this one's going to exit way up here instead of exiting in a ratio. I don't know if that makes any sense. Like, you're going to buy a 5K each say 2 pips of this plunge. So 1, 2, 3, 4, 5. Big master stop, never got hit, the perfect entry. You would have wished you had another 1K here to buy. But this bottom one, if you set the ratio to always make X, so you're risking this to make this double your money, then it's going to look like this on the exit, where it's just nothing but a linear amplification of the entry. So these guys are spaced, and the ratio stays the same, relatively the same. I guess the other idea is that you would create one like this, where you have a buy limit here, you have one here, and you have one here, and there's your stop. So the snowman's land could be taken up by another time frame. Say this order lasts a different amount of time. So it's interwoven in there, and when the market comes down and does this move, some of these guys are scalps. You could also make the whole array stack up like where you just have to imagine it out here in space. Buy. So you just buy linear grid, and then on the way out, This one's going to get out here. It's really just a scalp bank. This one's going to get out here, and so on. So everything in there is like a scalp, where it comes into a box here. Market crushes in, and as it's coming out, it's just scalping. It's out of everything along the way because it's got tight stops and just double your monies. So each baby order looks like that. Inside the different color inside the thing. So this is the entry, and then your exits are just right along the way there. There's no there's really no kind of like, hey, we're gonna ride this thing back. It's just nothing but a whip capture script, like maybe it lasts 15 minutes or an hour. Market comes down here, does its reversal, and it's out. I mean, it's out early, and or you could just keep putting a single in like that. So looks like we're gonna take a ride up. Okay, here's the thing. The spread's gonna get really terrible here in about 10 minutes, and then I'm gonna come at buy limits right after the market comes over. But the euro's already taken out the high and the low of took out the low yesterday and the high today. This is taking out the low yesterday by 10 pips. That was the ideal reversal entry. And even if you traded this first bounce, you made like 15 pips here. If you started buying the fresh lows that came about in here, and then you dump here, and if you let the rest ride up to a retest, that was it. Now let's get in here. Get to here. They'll trap these guys. They'll pull it back. So you're either going to ride it back off that, or you're going to ride it. If it ever comes back to this top, people will probably get in. If we're going to go do a breakout tonight, possibly, and test that upper area. But for the pullback entry people, they're going to think about this double top now. It'll be a comeback zone, which was the pivot up here. There's really only these two pivots right in the middle of fair value. And so it's a classic, just behavior on Wednesday, because they turned the swap button on. I was watching this guy trade with 6.1 lots, and his swap was $85, and I thought, geez, it does matter then. But your commissions just on that trigger pull's got to be at least that. I don't know. It's certainly below commissions. Okay, so this should be over by the top. The hour, get out of this thing. Be done. Waiting for Asia to start.